Hey traders, Akil Stokes here, Chief Currency Analyst at TradeEmpower.com, and welcome to another Forex weekend review video. In today's video, we're going to be looking at the psychological moves behind price action, as well as showing you guys a battle that I had this week on a particular pair. So let's get the disclaimer and the intro out the way, and I'll be right back for another jam-packed weekend review video. Hey gang, Akil Stokes here. Thank you again for joining me each and every week for my Forex weekend review video. In today's video, as I mentioned before, I want to look at really the psychological moves that happen behind the market. As you guys know, summer is typically a slow time for trading. Add that with all the grease mess going on, and we've had some pretty slow days here in the market. So I do a live trading room 3 hours a day, and well, when the markets get slow, we end up discussing a lot of different things. Sometimes they're trading related. Sometimes they're not so much trading related. We looked at gold cars today. But one of the better conversations we did have today talked about price action and how the market moves and why do we see some of the moves that the market makes. Now, obviously, I can't show you guys the whole video. I had to splice it up into bits and pieces in order to keep this video about 15 to 20 minutes. But I do want to show you a clip that I recorded from this morning's session. Now, keep in mind, what I want you to get, don't worry about the particular trade. Just think about the bigger picture. I do mention stuff like smart money, institutional money. Understand that each structure level is different. Just because it's structure doesn't mean that smart money or institutional money is going to be interested in it. They have their own levels that they're waiting for. What I want to explain in the video is just a basic, a story behind some of the moves that we see in the market. So it's about 5 minutes long. Check it out, and I'll be right back in a little bit. Again, I'm not interested in taking a short because we have the higher high, higher close right here. Now, we are above previous structure highs right here. So our minds should already be telling us, think trend continuation, think trend continuation, think trend continuation. We've tried to get past that level and got rejected 1, 2, 3 times. Each time we come back down, I guess this one doesn't count. Each time we come back down, we've put in higher lows so far. Goes back to the same kick in the door theory. You know, the market is, this is the door up here. These highs, the market is kicking it, reject it, kicking it, reject it, kicking it, reject it. Eventually, that door typically breaks. So I wouldn't be surprised if we saw a breakout to the upside here and not the downside, in my opinion. Because if there were smart money there, or institutional money there wouldn't necessarily be that many tests, at least that many big tests. But we'll see what happens in this formation. If you're looking to trade this, I would just, and it's weird because fundamentally you don't want to be long New Zealand and you don't want to be short dollar. But if we keep putting in lower highs here and keep testing this zone, just like the Euro Alls the other day, I would look for a chance to get short right here and see if you can play this as a breakout to the upside. Now, I don't know how much room you have to the upside, but here's a perfect example. So let's say I'm trading this triple top, right, guys? I'm selling that market, right? Boom, I'm short. Where are my targets at? Somewhere down here, right? Targets. Where do stops go? Come on, where do stop here? Above structure. What type of stop order goes here? What type of order am I putting on for a stop? I'm selling. You guys getting it? Some of you don't see it. Do you see it yet? Right? What happens if the market breaks out here? What's happening? A lot of traders who took this short, right? They're covering. I guess not covering, they're getting stopped out. And those buy stops are getting hit. Right? What happens when a lot of buy stop orders or a lot of buy orders flush into the market at once? What happens? Boom. That's how you get a breakout, guys. That's how you get a breakout, right? You add this to the breakout traders. There are some other breakout traders that have buy stops up here anyway, looking for the breakout, right? Breakout, 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 boom. No, price action doesn't drop. Price action goes up. Buy orders are flushing in. Everyone's buying. Price action explodes up. Make sense? A little crazy or not? Yeah, even the people going short are buying because they're buying out of their short position, right? They're saying, oh, insert cuss word, the market's going against me, right? They're getting stopped out. And then guess what happens after that, right? There's some profit taking up here. The market comes back. What is a technique that we teach to use when you know you're wrong and you want to save face? What's a technique we talk about? Graceful exit, right? So say there's a short trader right here, and you didn't, your stops, you're doing rookie traders mistakes. You're moving your stops back. You're saying, okay, well, I'm going to give the market some breathing room. All right. I don't want to get stopped out. And the market comes back down, right? And you're like, whoa, we're almost down to break even, right? I want to cover, right? You're still short from right here. You're still short from the marker, and you're saying the market's come down. It's taken me from minus 50 to minus whatever, minus 10. What are you doing? You're exiting your position, right? For a small loss. Am I right? You're trying to cover and take as little of the hit as possible, right? So what are you doing? More buy orders, right? More, because you're still short, so more buy stop orders. And then boom, it happens again. Trend continuation setup, right? Does it look familiar? Breakout, retest the structure, breakout. So that has nothing to do with really this trade, but it does give you, what I want you to get from that is hopefully it gives you hopefully it gives you an idea, again, psychology behind the market. This is what's happening. And as you get better as a trader, if you're new, don't even worry about this stuff, man. Just worry about how to draw a new structure low and a new structure high. That's all you need to worry about. But all right, guys, I hope you guys enjoyed that. Again, think of the bigger picture. Don't think about the specific case. I can see emails and YouTube messages already. Well, Keel, how come New Zealand dollar wasn't this? How come it wasn't that? Again, think big picture. There's a lot of the conversation that you didn't see. I just want you guys to get the basic premise behind it. And if you like what you saw, guys, that's what we discuss each and every day in the live room. Come and check it out for free. Go to our website, www.tradeempower.com. Click on FOREX live trading room and sign up for a free 1-week trial. I mean, look at the risk reward on that. It's free. You got nothing to lose. If you don't like it, if you do like it, well, maybe you found a new community that you can come and hang with 3 hours a day, sharing ideas, getting some support, and of course, getting some trading education mixed in as well. Now, the next trade I want to talk about came on Pound Aussie. And Pound Aussie and I really had a battle this week. I took about 3 trades on Pound Aussie, 4 trades actually. I took one this morning. 2 were losers, 1 was a break even, and 1 was a winner. So let's get into the charts and I'll show you exactly what I was looking at. And it kind of follows up on what I left off on with the live trading room video as just focus on the basics first. You know, there's no reason, there's no need to start with everything advanced. Focus on learning how to read the market, learning price action, the principles of new structure high, new structure low, outside returns. And you'd be amazed at how many simple trading opportunities you can get by just having that basic ground level knowledge. So let's head over to the charts and check it out. All right, so the pair we're looking at right now is the Pound Aussie on the 1-hour chart. Again, I mentioned I took 4 trades on this pair throughout the week. I'm not going to really explain the first one. The first one came, I believe, within this channel. It was an advanced pattern trade, I think a Gartley or a bat pattern, very, very low risk, and was taking a chance that the channel would hold, that structure would hold, and we'd see a move back across. Well, unfortunately, that did not happen. We did break out to the upside, and just like in the New Zealand dollar opportunity I showed you, once we broke up to the upside, let's move this line right up here. once we broke up to that upside, giving us our higher high, higher close, what I was looking for was really a retracement back in the structure and a chance to get long in anticipation of the market continuing to put in higher highs. Now, we're at an interesting level on the weekly chart. We do have structure. If I bounce out there real quick, we do have some minor structure up at this level. You can see not enough for me to say that, hey, this bullish trend is over. I still think we're in a strong bullish trend, but we are at a minor structure level. Our RSI is or has been overbought. So it wouldn't be a surprise if we saw some type of relief, some type of retracement, especially as we go down to the much lower time frames. And in all honesty, what's happening here on the hourly really doesn't have much effect on the weekly, but it still is good to get that top-down perspective of the market. But back to what I was doing during the week, back to my tries and failures with pound Aussie. Again, what I was anticipating was a bounce back into this level. I saw the market came here once, twice. On a third time, was looking to get, actually, I got involved right here, if we go down to the 15-minute chart, on that second bounce, looking for a move. Here we go. Looking for a move right back into structure. So I got involved right there at that previous structure low, a retest of structure. And I was anticipating a bounce back to here. Unfortunately, we didn't get it. The market came about halfway up to my target profits. I did roll stop, so I was actively managing this trade since I had a fairly large risk on the table. And I ended up getting stopped out for break even on the second half of my position. So it was one of those trades where it's like, you almost got it. But I did conserve capital. I didn't take any losses on here. Yes, it hurts that the market did end up going on to fulfill my initial prediction. But again, the number one rule of trading is don't go broke, conservation of capital. I didn't lose any money on this trade, so I can't be upset. And of course, more than anything, I followed my rules. Now, as the trading week went on, we continued to watch this pair. And I did take a second shot right down here. You can see price action came down one more time to previous structure lows. We actually, this data is a little bit different here than the data I use, but we actually had a double bottom that did not close below structure on my NinjaTrader platform with my, I'm not going to put my broker out there, but the broker I use, our data did not break and close below structure. So we took a very low risk entry here on the 15-minute chart in the live room, looking for that double bottom, and did get blown out the water again. And not blown out the water. We did take a loss. I like using terms like that to make it more fun. It's a little boring. Just say, oh, loss. You got to make it exciting. Blown out the water. Made massive profits. Have some fun with it, especially if you're on the losing side of things. But again, 0 for 2 right now on pound Aussie with one break even, one scratch trade. And it's setting up to be one of those weeks where it's like, okay, pound Aussie, you're going to be like that this week. That's how you're going to treat me. And we continued with it. Let's go back out to the hourly. And you're going to see something very interesting. Again, we had a break and close below structure here. Again, that was me getting stopped out on that double bottom. And going back to the basics of price action, what do we have right here? We could look at that as being our starting point, right? We have an initial structure low, right? Because we do break structure, looking left, structure leaves clues. We have an initial structure low. We've got our outside return. This could be a false breakout, and especially in a heavily bullish trend on the higher time frames. We do want to be aware of that. And then we have what? A lower low, lower close, new structure low. Now, I'm going to pause the tape for a minute and ask you guys, what does this formation look like? Yeah, this looks like a trend. This looks like a bearish trend, right? This 3-point move. One, outside return, new structure low. That looks like a bearish trend. Now, we do have to be aware that this could be a complex pullback, meaning that this can just be a retracement in the bigger scheme of things, but it's certainly worth watching for a trading opportunity. So after getting that new structure low, what I did was I kept an eye on our outside return and actually got involved in the market this morning right up here. You could see, it's a little easier seen on the 15-minute chart, but you can see the market probed this level, got rejected. And let's actually go down to a 15-minute chart. I'll give you a much better view of this. You can see right here, we had our pivot, we had our reversal, and I looked to ride this down and took profits right around here. Now, you're asking, Akil, how come I took profits right here and not lower? Well, I just defaulted to structure. I did get a little greedy earlier in the week. I was shooting for a move all the way across the market, mainly because the overall or the underlying trend was in that direction. In this case, this was a pure counter trend move. Again, everything higher time frame is screaming bullish, except for this slight little retracement. Again, certainly on the alert that this can just be a complex pullback or something like that in the bigger trend. So I wanted to find the first place that I thought the market would run into trouble at and take my profits there. And it looks like I made the right decision, because immediately after hitting targets, we rolled back out, stopping me out for break even on the second half of my position. But I was able to bank 82 pips off there. Nothing with the second target, so no big winner. But with how we've been trading lately, going up and down, back and forth in consolidation, those 82 pips were much needed in order to keep the ship steady with our syndicate statistics. So hopefully you guys get to see kind of the thought process that goes behind my trading. I think this was a good example of that. Also of how not to give up on a trade if it doesn't go your way in the beginning of the week. A lot of times traders will swing and miss on number one, swing and miss on number two, and then they'll just give up on the trade and be like, well, the pound Aussie just isn't for me. The euro dollar just doesn't like me this week. And they give up and they miss the opportunity that ends up making them profit, or at least bringing them back to break even. All right, guys, so that's it for this week. Thank you once again for joining me for another weekend review video. Before you leave, do me a big favor. It takes me about 2 hours to produce this video each and every week. I don't have to do it, but I really enjoy doing it because I like sharing this free content. I like chatting with you guys in the comment section. So do me a favor, hit that like button. Hit that subscribe button if you're not subscribed already. That way you get access to this video each and every week. And do me a favor, wherever you're watching this at, whether it's YouTube, the Trade Empowered website, Google+, Facebook, Twitter, whatever social media outlet you're watching this on, I know there's a share button somewhere, so don't be selfish. Share this with a friend, spread the love, spread the joy, bring more people in this community. And last but not least, before we head out of here, yes, I am at my stand-up desk. This thing is pretty awesome. I can raise it and lower it. Hold on one second. So it's pretty cool. I've been getting a lot of questions about that. No, I did not buy it just because I had a bunch of money laying around and felt the need to spend it. As you guys know, I'm very athletic, and I was just feeling that health-wise, I wasn't in the best health condition from sitting in front of my computer for 3 hours a day in a slouched, bad posture position. And my body was just really starting to feel it. So this way, I'm up every day. I'm feeling more energetic. I have better posture. I got to get a bigger microphone stand, but I have better posture. I'm just feeling better about myself each day. And it reminded me of a great book, if you guys can see it. It's called The Winning Edge. It was volume 4. Adrian Loris, I can't pronounce the last name, but you guys can see the title, The Winning Edge Volume 4. And it's one of the first trading books I remember reading. And it just talked about the negatives that can come with trading. And as far as, it's a lot of stuff, taking bad trades home with you, having an attitude. But one of it was really posture and just the toll that just sitting at a computer for a professional trader, the toll that it can take on your body. I wanted to do something about it. So I'm really enjoying it. I know a lot of you guys asked about it. So I'm loving it so far. My legs hurt a little bit from standing up all the time, but aside from that, it's great. So thank you once again for joining me for this video, guys. I will see you next week. Until then, plan your trade your plan. Best of luck in the markets this weekend.